Hello everyone, it's Wednesday, April 30. Today we're taking a closer look at the euro and the British pound charts as we assess potential market shifts. The euro spent much of the previous trading session moving sideways, but managed to gain some ground, supported by upbeat data on the euro area lending activity. Later in the day, traders digested weaker than expected US consumer confidence figures, with the index falling to 86, below forecasts of 87.7. The soft data went on the dollar, giving both the euro and the pound room to advance. However, the rally in the risky assets was capped following a speech by US President Donald Trump marking the first 100 days of his second term. The dollar responded positively to his remarks, particularly after he announced plans to ease sweeping tariffs on automakers. Trump also renewed his criticism of Federal Reserve Chair Jerome Powell, calling once again for interest rate cuts to stimulate the economy. Despite the greenback's bounce, the broader market dynamic remained largely unchanged, with no significant shift in momentum or directional bias. Now let's turn to today's macroeconomic calendar, which is packed with high-impact data from the Euro area and the United States. In Europe, the spotlight will be on GDP growth figures from France, Germany, and broader Eurozone. The bloc's economy is seen as having expanded by 0.2% in the first quarter, matching the pace seen in the final quarter of 2024. On the year-over-year basis, GDP growth is forecast to slow to 1% from 1.2% previously. Later in the day, investor focus will shift to the ADP National Employment Report in the United States, with private payrolls projecting to rise by 123,000 in April, down from March's gain of 155,000. Also on the radar is US GDP growth for the first quarter. The consensus points to a sharp slowdown, with estimates ranging from 0.2% to 0.4%, widely viewed as a clear signal that the economy is edging towards a recession. If the figures come in a weaker than expected, markets may begin to price in a more dovish Fed, putting pressure on the dollar and boosting risk-sensitive assets like the euro and the pound. In addition, traders will closely monitor the Personal Consumption Expenditures (PCE) price index, as well as consumer income and spending figures. Together, these reports could provide the catalyst needed for the currency pairs to break out of their current sideways ranges. In the case of disappointing US data, buyers may gain renewed momentum to push higher. Turning to technical analysis, the euro-dollar pair is currently trading around 1.1378. A false breakout at this level, especially following Eurozone data, would generate a sell signal, pushing the euro down towards 1.1320. If US data surprises to the upside, a break below this level could extend the decline to 1267 and potentially 1217. At this level, I would recommend going long on a rebound, targeting an intraday correction of 35-40 pips. Long positions at 1.1320 and 1.1267 should only be considered in the event of a false breakout. In a bullish scenario, if the price breaks above and consolidates above 1.1378, supported by stronger than expected Eurozone data, the euro could climb towards 14.35. A break above that level would likely require disappointing US numbers. This could open the path to 14.87, with the most distant target set at 1.1530. At this mark, it would be wise to go short on a rebound, aiming for a 35-40p pullback. Short positions at 1.1435 and 1.1487 should only be considered after a false breakout. Meanwhile, the British pound still has no room to extend its gains, but these would largely depend on US data. With no major releases from the UK today, aside from housing price figures, the dollar will remain the primary driver of movement. A decline followed by a false breakout at 1.3376 would generate a strong buy signal, potentially sending the pound-dollar pair up to 1.3421. A breakout and consolidation by these levels would pave the way for further gains towards 34.62, with the pair possibly reaching 35.10. At this mark, it would be wise to go short on a rebound, targeting a 35-40 pip correction. Short positions at 34.21 should only be considered in the event of a false breakout. A short position on a breakout around 34.62 near a new 1-month high may also be considered, but given that today marks the end of the month and U-peak is unlikely unless US data significantly underperforms. On the flip side, if bears regain control of 1.3376 and the price breaks below and holds, this would generate a sell signal, pushing the pound towards 33.31 and possibly 32.82. At this level, I would recommend going long on a rebound, targeting a 35.40 pip move. Long positions at 33.31 and 33.76 should be considered after a false breakout. Good luck to everyone.